Now as far as bank exams are concerned, all of you know it is being conducted by IBPS, which is the representative body of all the public sector and many commercial banks, and they are the persons who are conducting the exams on behalf of various banks, and they have not given any syllabus for banking. All they have said is that in GK the banking questions will be, the questions will be with the specific reference to banking. So they have not given the syllabus, but they have very clearly told that in GK all the questions will be with the specific reference to banking. Therefore we can more or less conclude majority of questions under GK will come from either banking or banking related subject. So it is very important that all of you should have a good grasp of banking so that you are able to get very good marks in GK. Now the next thing is, I have already told there is no syllabus given by IBPS, and at the same time they have told that all questions will be with reference to banking. Then what is that we have to study under banking? Banking is a very vast subject. It's an ocean by itself. Even if you spend one whole lifetime, you will not be able to master it. Therefore, what we have to study under banking? For that, we have to go by reference to some of the previous question papers. Let us take two recent question papers. One is Reserve Bank of India Grade B Officers Exam conducted in the year 2016. Now I will give you a sample question, some of the sample questions asked in that exam. The first question is talking about reverse repo. The reverse repo operations of the RBI are meant to, the question is, it is meant to inject liquidity or absorb liquidity or neutral to liquidity. So unless a person knows what is repo, what is reverse repo and how it operates, what is its impact on liquidity, how RBI is using that tool to control liquidity, one will not be able to answer this question. The next question is microfinance institutions which are registered as NBFC are regulated by whom? Now here there are two entities. One is microfinance institution and the other is non-banking financial entities. Now microfinance institutions which are NBFCs is controlled by whom? NBFCs are controlled by Reserve Bank of India. Microfinance institutions which are NBFCs are controlled by whom? It's a very specific and very refined question. And also it has got relevance to some latest development. There was a move that microfinance institutions which are NBFCs must be regulated by Mudra Bank, which was recently inaugurated by our Prime Minister. But later on this was abandoned. Now it is the Reserve Bank of India who is the regulator for microfinance institutions which are NBFCs. So the third question that has been asked in the recent Reserve Bank of India Grade B exam 2016 is that what is the corpus of the recent India Post Payment Bank? The answer is, it's a specific answer, the answer is 800 crores. The fourth question is, what does the alphabet D stands for in the acronym NDTL? NDTL means Net Demand and Time Liability. It is based on the net demand and time liability only, CRR, SLR, they are maintained. Therefore, the correct answer is demand, net demand and time liabilities. And the fifth question is, what is the periodicity of interest payment in savings bank account as per instruction of RBI? Now this is a very interesting question, because all along banks have been giving interest on savings bank only every half year. This has been the standard practice for so many years. Now suddenly Reserve Bank has now changed it to quarterly payment. Now this means that people who are keeping their monies in savings bank will get interest instead of half yearly, every quarter. So this is a recent guideline of Reserve Bank of India, and therefore the correct answer is quarterly. Now let us see another set of question papers. This is also an important examination, namely IBPS PO Mains 2015 exam. This is the exam faced by many persons. Now let us see some sample questions from this exam. The first question is, for exercising right of set off, what document is required by a bank? Right of set off means the right to combine accounts. Banker has got a right of lien and then right of set off. Right of lien is to have a right over the goods that are left with a banker, and right of set off is with regard to accounts. Right of set off gives the power to the bank to combine the accounts. Suppose there is a borrower who has borrowed money from the bank. Mr. A has borrowed money from the bank and he is not repaying it. He has a similar account. Mr. A in his capacity, individual capacity as Mr. A has another account in which there is a substantial credit balance. Then the banker can combine the account. This is called the right of set off. For getting the right of set off, the question is, what is the question? Under what document the banker gets the right of set off? As a matter of fact, the banker gets the right as a creditor. As a banker, he doesn't need any document. So the correct answer is no document. The next question is, what is the maximum loan that can be given against the shares? Now people know they are dealing in share market. They come to the bank, they pledge the shares and take loan from the bank. What is the maximum amount? Can we give unlimited amount? 1 crore, 2 crores, 5 crores? No, there is a limit. The limit is 20 lakhs. Per individual, we can give only up to 20 lakhs. The third question is, a demand draft is issued by a bank. It must be encashed within what period? This is also a very interesting question, because the demand draft earlier, you know what is a demand draft? Somebody wants to remit some money in the good old days. Now demand draft is a dying instrument. Slowly its usage is waning and one day it may die. But in the past and also in the present, we are still using demand draft has not died totally. It is still there here and there in all government departments and all. Still they ask for demand drafts. Therefore, in the old days, it was the validity of a demand draft was for 1 year. Then it was reduced to 6 months. Now the Reserve Bank has taken the decision to reduce it to 3 months. Why? It is because many people with the black money, what they used to do is they used to buy a demand draft and keep it with them for 6 months. At the end of it, they will open an account and deposit the money in the demand draft, or they will cancel the demand draft and deposit the money in the account, and then they will close the account. Now this is being used, the demand draft is being used as a vehicle to temporarily stash black money. So Reserve Bank wants to curb this tendency, and therefore they have reduced the period from 6 months to 3 months. So the correct answer is that a demand draft issued by a bank must be encashed and is valid for 3 months. The fourth question is, what is the minimum maturity period for FCNR banks? FCNR means foreign currency non-resident account. Suppose there is a person who is employed in Dubai or in Gulf and he sends money in dollar, that he can open a dollar denominated account in India. That is called foreign currency. The account is opened in foreign currency and it is opened by a non-resident. When you combine these two, you get foreign currency non-resident account. What is the minimum period? Earlier it was 6 months. Now it has been recently increased to 1 year. Then the fourth question is, which one of the following is not a monetary tool of Reserve Bank of India? The question is having a not, you should remember that. Which one of the following is not a monetary tool of Reserve Bank of India? It lists repo rate, reverse repo rate, CRR, SLR and then interbank rate. Of all the 5 items, interbank is not a monetary tool. It is decided by the banks based on the market situation. Therefore, the correct answer for this question is interbank rate. Then the fifth question that has been asked in the IBPS PO 2015 exam is, banks in India are required to benchmark their lending rate with reference to which rate? Normally, if you see the bank, it will be 2% over this rate, 3% over this rate. There is a benchmark rate upon which all other rates are hinging. All other rates are annexed to or attached to. What is that rate? That rate earlier, when this question was asked in 2015, the answer was base rate. Now subsequently, Reserve Bank has shifted to MCLR, marginal cost of lending rate. The correct answer today is marginal cost of lending rate. Now we have seen 10 examples of questions. What is that we conclude from these questions? I have given you in a sporadically selected questions from 2 major examinations. The questions show to us that the questions are not superficial or elementary. If you see each question, it requires an in-depth understanding of banking. That is the first thing we notice. The second thing is, it covers the latest developments. For example, state savings bank rate has been recently changed, that has been asked. So recent and latest developments are incorporated in the question. Third, to answer the question, you require a good conceptual understanding. For example, write-off set-off doesn't require a document. Unless you have a conceptual understanding, you will not be able to answer this question. So these are the 3 requirements that are required for answering the question. First is the nature of the questions. The 3 features of the questions are it is not superficial, it requires an in-depth understanding, latest developments are covered, and then you must have a good conceptual grasp of the concepts, then only you will be able to understand. Now in this presentation of bank video lessons through under banking, what we are trying to provide you is exactly these 3, namely, first, a conceptual understanding of the various concepts, then it will not be superficial, it will be in-depth coverage, and third one is we will be adding latest development on each subject as and when and as and where required. These are the 3 principles on which we are going to take the class. Now before I conclude my introduction, I will have to make some disclaimers, because disclaimers are very important. What we are trying to provide you is not a treatise on banking. It is not meant to be for actual practitioners of banking or advanced practitioners of banking. It is an attempt to provide banking knowledge to people who are not exposed to the concepts of banking as a graduate, who have not had a theoretical understanding of this subject. For example, IT graduates, EEE graduate, ECE graduates, all these people come for banking. For them, they should have a basic understanding of banking. This our attempt is to provide you a basic understanding to all those engineering and other non-commerce graduates who are writing the bank examination. So in that process, we have done certain amount of simplification. This simplification from an expert's point of view may not be correct, but for a better understanding, we have to simplify. Therefore, the experts who find that we have oversimplified certain concepts must excuse us, because it is not meant for experts, it is only for the beginners. Let us not forget, this course entirely is for beginners who are non-commerce graduates.